on any chart you're reading. All I know is Bitcoin's fading. That's what the chart told us. That's all you guys got to know. The why stuff is not important, right? And when price was up here and starting to fade, what do you think our targets were? Well, the upper value range, obviously, which you found. And then based on just this simple bit, what we have here, what would the next target be? Maybe the point of control. Fail one level, find the next. And that refers to and is applicable to the value ranges in the POC and moving averages and levels of past price and liquidity. Fail one, find the next. This just becomes a target. That's all. We've seen this a million times. You're short to the upper value range if you're at the top. And when you get there, you figure out what you want to do. If it still looks like your trade is intact, which it was, obviously, you're probably going to let it run. And this is where a lot of people get faked out. Now, you can trade those three green candles all day long. There's nothing wrong with that. Right? You're going from 103 to 105.8. That's almost $3,000. There's a way to make some money there. But did it change trend? No. How many times do we show this? Every week, every Tuesday and Thursday. We see price looks like it wants to rebound. The whole world gets excited. Doesn't matter what the ticker is. And as long as this divergence is intact and these candles are doing nothing to change that dynamic, guess what's going to happen? You're going to move up, arch down, and take out the previous wave's low. And in doing that, where would that put us? It puts us, that previous wave's low, into this gap. Right? It puts us into these gappy areas. And we know what happens when we get there. You fall quick. Remember, was it last Thursday? We were talking about, hey, where's this 4 hour going to find itself? And we said, probably going to find the gap, because we knew this was the gap, upper value range. This is the POC, so we know this is a gap up here, and it found it. Right? The chart didn't lie to us. Right? It did exactly what we thought it was going to do. And it was a simple analysis that, hey, we have a confirmed downtrend. We have a big gap with the point of control at the bottom of it, which is a draw for price. Is it reasonable to think that, hey, unless a boatload of money comes in to change direction, and as long as we can confirm that that money's nowhere to be seen, because that's what this divergence is telling you, then you stay short. And you stay short until that trade's invalidated. Now, whether you paid the insurance, like this is this, if you took this signal and you paid the insurance up here, that's okay. Or you entered in and around here, that's okay too. You're big people, you're grown-ups, you can make your own decisions. We just want to give you the right tools to make them with. And if you're using proper risk mitigation and you're running stops, yeah, you might get stopped out, but that's okay. Like, you know, you'd rather get stopped out, lose a little, so that you can live another day to make a lot. Right? Set the stops, follow the chart, just do what you're told, you'll be okay. And it doesn't invalidate, doesn't mean you're wrong when the chart bounces or anything like that. Where did this bounce take you? Right into the volume gap on the way back up. And I'm sure there's a few other things in here that are giving us support and resistance.